dear students, myself Dr. Usha, Assistant Professor and Chairperson of the Department of Studies and Research in Commerce, Karnataka State Open University, Mysuru. Today I am going to start up the concept which is relating to the Advanced Financial Accounting. It is a course, soft core paper in MCOM first semester for CBCS students. In soft core paper for the accounting specialization student, advanced financial accounting is there for the first semester, and in advanced financial accounting there are 12 units. Out of this 12 units I am going to cover today which is respect to unit 1. Unit 1 is of company final accounts. And unit 2 is also covered of company final accounts, whereas in unit 1 we are going to study the theoretical aspect, and unit 2 is completely of the illustrations or the problems that how to prepare a financial statements of the company. In this unit we are going to discuss about meaning of financial statement and financial year. Next, provisions of Companies Act 2013 for the presentation of financial statements of a company, statement of profit and loss. In that statement of profit and loss, we are going to discuss what are the objectives of statement of profit and loss, what is the format for the preparation of statement of profit and loss, and how to prepare the cost of goods sold in order to prepare the statement of profit and loss. Next, the balance sheet. In that balance sheet we are going to discuss about the format for the preparation of balance sheet and also the important terminologies while preparing the balance sheet. Let us start with the financial statement. Before going for that, let us understand what is a company final accounts. So here company means a joint stock company. Always the company is governed by the Companies Act of 2013, and every company, their operational activities must be communicated in terms of the financial account. We call it as financial statements. It is a business communication. What is financial statement? A financial statement is one of the business communication that the business is going to communicate along with the stakeholders in terms of this financial statement. What is a financial statement according to the Companies Act? Let us discuss now. Financial statement as per the Companies Act of 2013 under section 2 subsection 40, it defines a financial statement as an inclusive definition which includes, first one is a balance sheet. It is balance sheet at the end of the financial year, and the second one is a profit and loss account for the financial year. For the financial year it is. In case if the company is carrying their business not for the purpose of profit, then they are going to prepare income and expenditure account in place of profit and loss. And third one is a cash flow statement. It is for the financial year. And the fourth one is a statement of changes in equity if it is applicable. I repeat once again, there are 4 items to be prepared by the company as a financial statement as per the Companies Act of 2013. First one is a balance sheet. It is one of the very important financial statement of the company. This balance sheet is prepared at the end of the financial year always. And next is profit and loss account. Actually, as per the Companies Act, earlier we used to prepare the profit and loss account. But now, as per the Companies Act, we are going to prepare a statement of profit and loss, and it is a vertical statement where we are going to prepare a statement of profit and loss to know the profitability position of the company. And the third one is cash flow statement. This is for the financial year. For the complete financial year, we are going to consider all the cash flow activities of the business, and we are going to prepare this cash flow statement. And this cash flow statement is to be prepared as per the accounting standard 3. And the fourth one, it is a statement of changes in equity. Whatever there is a changes in equity with the opening capital, anything, if there is any issue of shares, debenture or redemption of shares, or what is the closing of equity, that will be prepared in the statement called a statement of changes in equity. And one more thing very important is, whatever the financial statement as balance sheet, profit and statement of profit and loss, we prepare. For that, an explanatory note must be given at the end. At the end, every company must have to give an explanatory note after the end of each statement, that is after the end of balance sheet and also the profit and loss. As we have discussed, the financial statements such as balance sheet, statement of profit and loss, cash flow statement, and also the statement of changes in equity has to be prepared by all the companies as per Companies Act of 2013. Whereas the companies such as one-person company, small company and dormant company may not require to prepare cash flow statement as a financial statement. So, but to prepare the cash flow statement and the statement of changes in equity, there is no particular format which has been provided by the Companies Act of 2013. However, this cash flow statement can be prepared and presented as per the cash flow statement, that is the accounting standard 3. As per the accounting standard 3, the format is given to prepare the cash flow statement. And this financial statement of any company must have the following objectives, which should always have to give a true and fair view of the state of affairs of the company. I repeat, every company must have to give a true and fair view of the state of affairs of the company. Means every company's financial statement must give a true and fair view. And also it should comply with the accounting standard which is notified under section 133. And these forms are the formats provided by the Companies Act of 2013 shall be in the schedule, shall be as per the schedule 3. So this financial statement of the Companies Act of 2013 must follow these conditions as per the Companies Act of 2013. Now let us discuss about financial year. So far we are discussing that balance sheet should be prepared at the end of the financial year, profit and loss account, cash flow statement should be prepared for the financial year, correct? So now let us know what is this financial year means. When should it start and when should it ends? As per the Companies Act of 2013, under section 2 subsection 41, it defines financial year in relation to any company or a body corporate means. It is a period ending on 31st day of the March of every year, and it should start from the 1st April of the previous year. I repeat once again, this financial year, in the sense financial year always, as we know, it always starts from 1st of April and ends of 31st March of every year. It always, the financial statement of the company is to be prepared for the financial year, means for this particular year of 2022-23 or 23-24, means it should start from 1st April 2023 and ends on 31st March of 2024 of the next succeeding year. And it should not start from 1st Jan 2023 and ends on December 31st 2023. It always starts from April 1st and ends on 31st March. Let us now discuss about the provisions as per the Companies Act of 2013 under section 129 of the Schedule 3, that how to prepare the financial statements of the company. The Company Act of 2013 provides some conditions and instructions to prepare the financial statement, that is the statement of profit and loss and the balance sheet of the company. Let us know what is that conditions or the provisions. The first provision is any changes in treatment or disclosure, which is including additions, amendment, substitutions or deletions of any head or subhead or any changes in the financial statement shall be as per the Companies Act of 2013 only. Means for the preparation and the presentation of financial statement should include any additions or amendment or any substitutions or deletion, but that must be done as per the Companies Act of 2013 only. And the second conditions or the provision is the disclosure requirements. Any disclosure, say for example in the financial statement, for example the statement of profit and loss account, where we are going to disclose the opening stock and the closing stock. That opening stock and the closing stock along with any income in the credit side and expenditure in the debit side must be disclosed as per the requirements specified according to the Companies Act of 2013 only. In case of any additions must be included, whereas it is not in substitution to the disclosure requirement. So if any financial statement prepared by the company must always follow the provisions or the format given by the Companies Act. And also if there is any additional disclosures required, which should be followed in accordance with the accounting standard also, and that accounting standard, as per the accounting standards, if required, notes to an account at the end of the financial statement as an additional statement can be specified or presented. That notes to an account as per the accounting standard shall contain an information which should be in addition to the financial statement, whatever the items which is specified in the schedules of the financial statement, that with any required information to be presented can be presented in the notes to an account at the end of the financial statement. And next is each item on the face of balance sheet or the statement of profit and loss shall always be cross-referenced to any information in the notes to an account. Say for example, the format of financial statement like profit and loss, which starts from, first one is a particulars, next is a debit credit item. Between that, after the item of particulars, there will be a reference, cross reference, where in that cross reference then an item like, for example, the revenue from operation. For that revenue from operation, if there is any explanation required, that will be given in the notes to an account. But for that notes to an account, in order to know this note is relating to and which item, that must be cross reference like as one which is reference to and revenue from operation, and second it can be relating to the cost of goods sold. Like that, the notes to an account will be given at the end of the financial statement is to be cross referenced in the financial statement. And next is comparative information for the two different period must be given in the financial statement. So for example, if the company is going to prepare a financial statement, that financial statement must always have to be compared with the previous year financial information. Always we know that this financial statement is quantified, is presented in terms of monetary benefits, in terms of money, correct? So this always to know what is today's company's position in terms of profitability or financial position compared to the previous year, so that the stakeholders can understand easily that what was the position of the company and what is the position today. So this helps for every stakeholders. So this is one of the requirements and the conditions as per the Companies Act while preparing the financial statement, where in any financial statement can be the balance sheet or the statement of profit and loss, the 2 periods of financials, that is the 2 years information in terms of monetary items must be presented. Whereas in case the company which is incorporated this year, that is the company is started the business only this year, they are registered and commenced their business in the year 2023, means they do not get the previous year information, because this is the only year where they have incorporated or registered. So except that company, all the other company, whoever can able to provide 2 periods financial must have to have a 2 years informations in the financial statement. Now let us discuss one by one about the financial statement. The first very important financial statement is statement of profit and loss. Earlier, as per Companies Act, the earlier Companies Act, not 2013, we were preparing profit and loss account. It was an horizontal format where we had a particulars, where the debit side of the particulars and the credit side of the particulars with the amount column, where we used to show the debit item and the credit item on the left and right hand side respectively. Whereas as per the Companies Act of 2013, it is compulsory that every company must have to prepare the horizontal format of financial statement, including the statement of profit and loss also. This statement of profit and loss, the format, we are going to discuss the format for this. But this statement, why we have to prepare this, the statement of profit and loss, why it is necessary to prepare and how it is to be prepared, let us discuss one by one. This statement of profit and loss, mainly it is prepared to know the profitability position of the company, and also to know what is the net profit today compared to the previous year. The main objective of preparing this financial statement, that is the statement of profit and loss, is to know the net profit of the companies for the particular period. And next thing is, this is to be the main aim of this financial statement, that is statement of profit and loss, is also called as an income statement, is to quantify and present the financial performance of the company. The financial performance of the company in terms of the profit for the given period is one of the objective. And the next is to disclose the total income of the company with the expenditure made. Whatever the income earned by the company and how much expenditure is incurred by the company, and what are the income tax paid or any dividend paid to the shareholders, everything will be shown in the statement of profit and loss. The balance, whatever is left, is called as net profit, and out of this net profit of the company, some amount of profit will be paid as a dividend to the shareholders, and the remaining will be the reserves, is also called as flowing back of the company, that is retained earnings. Let us discuss about the objectives of objectives of statement of profit and loss. The main objective of, as I said, the main objective of the statement of profit and loss is to know the results of the company within the given accounting period. Say for example, the accounting period or the financial year, it starts from the 1st April and ends on 31st March, correct? So for this period, what is the results of the company in terms of the profit? Okay. Next is to know the operating efficiency of the company. So what is the company's effectiveness and efficiency in terms of operating activity? That can be assessed through this statement of profit and loss. Next is to know the progress of the company as compared to its last year. So compared to the previous year, what is the progress? Whether the profit of the company is increased or decreased, or is there any changes, or it has earned a break-even point. That can be assessed through the statement of profit and loss, as we are going to compare the present year profit or loss with the previous year. This also helps for the company to know or to forecast the future prospects, that if this year the company has earned 2 lakh crores of profit, means next year how much it is going to be earned, how much it can earn, that can be forecasted through this statement of profit and loss. These are the very important objectives of the company's statement of profit and loss.